Welcome to today's webinar. We have Bob, Nusani, Tom. If you have your mics to unmute, go ahead. We got more people joining in. One phone, Monty Gress, welcome. Again, if anybody wants to say hello, we welcome your audio. Tom Sharp, welcome. S. Blair, welcome to the webinar.
Hello and welcome.
Hey, Tom, how's it going?
Good. I've got a question when it's appropriate.
Yeah, go for it.
Well, on last Thursday's TLT trade, I used the August 30th, which is next, what, that's tomorrow? No, wait.
That's next Friday, yep.
Yeah, I had used August 30th, and right now that the short call is showing about 80% profit, and I wondered, should I consider, or what are your thoughts about, because you don't give over the advice over the thing, but what are your thoughts about taking that thing off at an 80% profit right now?
Oh, sure. Yeah, I'll jump into that question in a second. Let me just welcome everybody coming in, and I'll definitely cover that.
Thank you.
Of course. Francis Brown, welcome to the webinar. If anybody wants to unmute their mic, please feel free to do so. And yeah, to answer your question, I'll pull up today's trade alert so you can see what our current recommendation is. So yeah, this is my current recommendation on the TLT, which you should get today, unless you're on the expired list, and you'll get it at the close. And so it has a potential profit of $1.79 a share or rather $1.70, and a potential loss of $1.79. And the live stream that hits at 2 o'clock today, or rather 4 Eastern, is also good. I go into the bond market for about 40 minutes. But in general, I'm very bullish on both the US bond market and the US equities market, with the only catch being how much will the Chinese fight back in this trade war. So we'll jump into that in a minute. Let's see who we got in here. Let's see, got some more folks joining. Kate, welcome. You have audio, Kate? All right, well, welcome everybody. She says yes, but she wants to type in the chat button. So yeah, feel free to communicate either with your microphone or with the chat box. And so back to your question, I would definitely follow the trade alerts and not try to diverge from what we recommend. So you would probably want to close out the previous trade and then replicate what we have now so that you can accurately follow the program and not try to really second guess, try to optimize the trades. A lot of people I've found think they can well, here's what I've found is a lot of people like to jump from whatever the last hottest trade we had. They like to go all in on that trade. And then the next week they'll see which trade had the biggest profit, and then they're only going to follow that trade. And so we end up with people kind of hopping around instead of really understanding the whole point of a diversified portfolio. And so we typically bring people into our program with the SPY product, which is equities portfolio number 1. And currently in my total strategy, I have 40% of our assets following the SPY. In fact, let me pull up this slide that makes life easy. This is, in general, the overall strategy we recommend to our clients in the current market conditions. And so it's slightly heavier on equities, but it's still 40% in the TLT. Now, if you're on a free trial with our program, you're only going to get to try out the SPY trade alert Monday, Wednesday, Friday. And the reason we do that is a few reasons. One, it gives us 3 trading opportunities to really impress our clients, which is tough because most people in this business, they do the opposite. They make you watch a 1-hour sales video, pay a bunch of money up front, and then go on to disappoint you with losing trades. And then they just hope you don't refund. A lot of those guys have 50% refund rates. Their credit card companies hate them. And God knows I've, over the last decade, have built a lot of those gurus' businesses to the tune of 7 figures, only to be really let down that the people don't get the results promised by the guru. And their quotes are always in their favor. The trade alerts are impossible to predict. The list of complaints goes on and on. There's a million different things these scrupulous people will do to take your money and then don't deliver results. And at the end of the day, their publishing companies, they end up trying to sell very hypey return promises where they're trying to make you 20, 30, 100% a year. And maybe they do well on their own, track record. But nobody else gets those results. And even if they do, oh, somebody want to mention something? Oh, Dan Corda, welcome to the webinar. I've unmuted you so you guys can all chat. So yeah, there's a million different scandals out there, whether it's a penny stock, a small stock, some crazy option program. At the end of the day, they're trying to generate big returns. Maybe they get lucky for a little while, then the market changes directions unexpectedly. Everybody takes a huge hit. You guys know the story. Our program's not trying to do that. We're actually trying to give out the trades for free, show you we're not trying to create magic here. It lets you see what it's really like to follow our program. And then people join because they're really impressed with the strategy, they're impressed with the results, and it all makes sense. So if you're just getting started with our program, a lot of people, I really recommend you just trade 100 shares of the SPY Monday, Wednesday, Friday. Get all the mechanics down so you understand how to do the strategy. Then as you're ready, expand and take on the rest of our trades. And so when you really follow our program, the safety net is that we essentially have about half our portfolio in equities and half our portfolio in the bond market. And because when one goes up, the other goes down, in general, this creates a scenario where it's very hard for us to have a losing month. And so you can see our returns to date, if you combine the strategies, are pretty rock solid. Now we're not making people rich overnight with this, but in general, we've been able to attract over 100 clients in the last 8 months. And this is without bragging about anything in the past. This is just simply with giving out our trade alerts. People see it, listen to the daily content, and they want something that is rock solid. And so you can see our returns, if you do overlap the SPY and the TLT, we've only had 1 losing month in July. And so we've averaged anywhere as low as 1.2, and the best month we had was 3.2. Now, if we just look at the SPY program, which is where I would recommend most people start out, as soon as you can easily follow our SPY trade alerts, you can easily calculate your profit loss from each trading period. That's when it makes sense to say, okay, well, I understand that I need to balance a stock and bond portfolio and not just be overweight in stocks. And so you can see the returns of Portfolio 1, the SPY program. It's nothing lavish, but we had a 0.5% in December, 3% in January, and 2.5% in February, 1.5% in March. We were flat in April. We lost 1% in May and July, 3.4% in June, 1% in August. Okay, so today's goal is to help you guys become comfortable with the trading style so that you can accurately follow the alerts and then open your eyes to what the big picture looks like with our strategy. And I'm also going to lead into, a lot of people want to know, how do I pick the direction of the SPY in a 2-day period and what strikes I'm picking? Well, I've got news for you guys. I don't have a magic wand or some sort of magic 8-ball that tells me what's going to happen. But what I can do is understand the macro environment. I can look at what the big forces pushing the markets are. And I can also spot out where are the potential earthquakes that could disrupt the trends. So when we do that, it creates a pretty rock solid strategy for generating consistent returns. And our goal is really to generate retirement income. So before I jump into some real life examples, are there any questions that anybody wants to bring up right now? All right, well, no problem. Let's go ahead and jump right in. So I want to start off by demoing 2 of our most recent trade alerts that generated a profit in the SPY. And I want to showcase how one of those was designed to profit from the SPY going up in value, and one was designed to profit from the SPY going down in value. And this will help you understand how we can use the SPY ETF, take advantage of its 3 option expirations a week, and safely generate income. And this is by far our most popular product. It's very sexy. It's the most highly traded security in the world, bar none. It's top position in just about every hedge fund, mutual fund, pension fund, and even now in central banks across the globe. Not the Fed, but some central banks are actually starting to buy equities. And it's the only security that has options that expire 3 times a week. So because of that, it's very sexy. It's great for generating consistent income. And it allows us to essentially just go with the flow of the market and react quickly to changes that are occurring. Now, in the rest of our product, like the TLT and every other security in the world, there's only 1 option expiration a week. So there's just not the opportunity to trade those as frequently. So let's take a look at our SPY portfolio. Here is a look at it. Now, you do get a copy of this spreadsheet to manage your own trading if you want to do so when you become a member. Most of our clients just don't want to fill out spreadsheets, so we've designed this to be so easy you don't need that. I noticed a new person just joined in. Kent, welcome to the webinar. If you want to speak, you're unmuted. You just got to hit that mic button and you can chat at any time. So first, I'll start off by just showing you an outline of how we organize our trades so that you can see how to read the track record. Now, every update we send out to your email has a link to this track record. So you can go down here and you can click on it all and see everything. You can see the summary. You can see the return month over month per portfolio. You can see the starting balance and end balance of each of these portfolios, which is, of course, how it's calculated. And then you can click these buttons below to see the different track records. Now, what I'm not doing is posting the live trade and the track record. That's only going in after we close it. And that way people can't steal our intellectual property and never join our program. So first we have the SPY program right here. Then we have the Thursday TLT trades right here. We have the SPY alternative trade on this tab. And then we have our buy and hold precious metal portfolio at the last tab. So for today's webinar, we'll mostly focus on just the SPY program because again, this is the one that'll get you the most active. It'll get you some consistent trading going on. And if you can accurately follow the SPY, you can easily follow the TLT or anything else I throw at you. Okay, so we're going to look at 2 trade alerts that, granted, were profitable, and we're not looking at anything else for this demonstration today. So I want to pull up a picture of the SPY, and then we'll go and look at 2 examples of how we do our trades. Okay, so the first trade we're going to look at was from the date of August 16th through August 19th. So if we pull up the calendar, that was last Friday and into this Monday. This is the video. Now again, on every update, we also have a link to the categories, and you have a nav bar. So if you want to go through our different trade alerts with a fine comb, go for it. There's a video that's about an hour long each day where I go over the previous day's trade alert, and there's a post, there's screenshots, so it's pretty transparent what we're doing. And you can go back through every trade recommendation, watch every video, and do your own due diligence outside of this this webinar. So I do want to make sure you know that. And again, just a disclaimer, we don't win 100% of our trade alerts. I'm only demoing 2 examples where we have actually generated a profit, just to illustrate, number 1, how we can make money when the SPY goes up, and then number 2, how we can make money when the SPY goes down, and how we alter our trade to do so. Okay, so this is from August 16th, again, to August 19th. And this was one of our larger gains in the history of doing this program. And so let's just take a look at the trade alert we had issued. So this is the format of how all our trade alerts have been produced, at least for the last month. We have the video up top, which is usually a 30 to 60 minute video. I start off by reviewing what the previous trade did and how to get in and out, kind of the mechanics of it. And then I go into all the news I've collected over the previous 24 hours. That's going to give you some insights as to the direction I'm picking for the asset and how we're optimizing the option contracts to protect and profit from that prediction. So the next piece of it will review the previous trade results, which is what you see right here. Then you get a picture of the track record. The track record will have a link, if you click it, to the spreadsheet. So if I click that, it goes to what we were just looking at. Next, we have a summary of the trade alert. This is also text messaged to our active subscribers. A lot of our clients travel, so they have this down so well they can do the trades from their phone in a couple minutes. And so a lot of folks are actually ignoring all the great content I put out. They just want the simplified text message, which is fine. And then we go into what to do with visually descriptive instructions. So the first step for a lot of people who are just getting started is actually going to be to skip step 1. So this step 1 really is useful for people who took the previous trade alert. So I'm going to go ahead and skip step 1, assuming this was your first trade following our program. And so step 2 is where a lot of you guys will start out. Now it's important, I don't recommend you just outright own the SPY ETF. In fact, if you do listen to my content, I think we're in a very big bubble, a bubble that I expect will get much larger before it pops, but trying to time when it's going to pop is nearly impossible unless you're inside the head of President Trump or the President of China, President Xi. You're going to have no clue when this thing becomes escalated and when we're going to see dramatic sell-offs in the SPY. We've seen that the market has become extremely news sensitive around the trade war. And we've got strong earnings, we've got low interest rates, the bond market's not competing for return, except from a speculative standpoint. So at this point in time, I want to be long the SPY almost all the time. And the only catch is when we see the market sell off from bad news. And so most of this month was a big sell-off, and then we finally got a rebound, and that's when we flipped to being bullish on the SPY. Now the next trade I'll look at will be one where we made money to the downside, but this trade alert is after we had a big sell-off, we became bullish on the SPY, and we'll see how this trade worked out. So step 2, for every 100 shares of the SPY you own, you're going to enter one of the following option contracts. Now, this is the standard setup for a trade alert if we are bullish on the underlying asset. So if I think the SPY is going to go up dramatically in value, which is my current outlook, I'm going to sell a call option well above the trading price. I'm going to buy a put option well below the trading price. And so let's just look at how this trade works out. So, and again, this is how you're going to learn to do your own accounting on our trade alerts. So step 1 is we need to write down not the price we paid for the SPY initially, but the price of the SPY going into the trade alert. So going into this trade alert, we can all see the SPY was trading at 288.40. Now I'm short a call and I'm long a put. So let's just review what that means for anybody who needs a little refresher on options or if you're completely new to it. So if I sell to open the August 19, 2019 291.50 call option, I can take in a credit to my account of 26 cents a share or 26 bucks. That's not a lot, but what does this really mean? It means I am willing to sell my block of 100 shares of the SPY for $291.50. And that, at the time of this trade alert, was significantly higher than the value of the SPY. So I get 26 bucks plus the worst case scenario for me in terms of that call option being assigned or exercised is that I'd have to give up my shares at a price tag of $291.50. So that's about $3 of profit, plus I get to keep that 26 cents. So if the SPY were to skyrocket higher, which it did over the weekend, that's great. We don't mind that one bit. Now on the other side of the coin, because we know we are in an equity bubble that's hypersensitive to negative news regarding the trade war, tariffs, those are really the key things right now. If we started to see an earnings recession, you can bet this would really pop quickly. Or if we saw the corporate bond market starting to tighten up, which means the corporations don't have the free capital to buy back their own stocks, there's a lot of reasons the SPY could have a sudden sell-off. So we don't want to just outright own the SPY without downside protection. So by buying a put option at the 285 strike, I now have protection to the downside for 48 cents a share. So if this had gone the exact opposite of how it did that weekend, and the SPY had opened up, say at 280 or 275 because the trade war escalated, China's dumping their treasuries, they're kicking Apple out of China, who knows what they're going to do to really retaliate. We want to have that put option. So we used the call option credit to pay for half of our downside protection in this specific trade. So we actually had to pay 23 cents to create what's called an option caller. And the overall result is that we're going to give up some of the upside potential in the SPY, but we still make a great handsome profit if it does travel higher. And if the worst case scenario happens, perhaps it's unlikely, but if the worst case happened over the weekend, we had a surprise Sunday Trump tweet, or the Chinese started to devalue their currency, which they started to today again, we have absolute protection no matter what. Because we bought that put, we can sell our 100 shares we own for $285 because we bought the insurance. Okay, so here's the two things we really got to pay attention to. We got to pay attention to what happens to the SPY between now and Monday when we close the trade. And we got to pay attention what happened to the option caller. So you can see we started off at a trading price of 288.40 and we paid a debit to open up the options for 23 cents. Now in each trade alert, I'm also giving you a handy risk graph. Now you will notice that sometimes, even though I had a debit, maybe the price changes a little bit on the SPY and you have a credit. It really doesn't matter. If I make a little extra on this trade, I might make a little less on the next trade. What's important are the strike prices. And so we can see, here's the potential outcome. I can make at most $287 per contract. And this includes what happens to my SPY. You can see this has in the risk graph that we've bought 100 shares of the SPY. Now on the other side, the worst case scenario, if the SPY crashes to 285, I walk away with at most a $363 loss. So the SPY could go to 270, 250, it wouldn't matter. Our losses stop at 285. And so that's why I like to call these trade alerts atomic bomb proof. No matter what happens, we can't win or lose a whole lot of money in any given trading period. Okay, so let's look at what happened from this trade to the next trading period. Okay, so, and I do this for you so you don't have to do a whole lot of math, but it's important that you can do your own accounting and audit to make sure you're actually getting the same results that I'm telling you are from the daily trade alerts. Okay, so what happened? The SPY, and let's go look at the trade to close it out. Now, if we go to the previous trade, you can see we sold the 291.50 call and we bought the 285 put. The trading price was 288.40. Okay, we go to the next trading period, and you'll notice I'm not trying to sell to close my put. Here's the catch. If the put option goes to a value of 1 cent, you cannot sell that put. So you just let those expire worthless. We're long the put, so it's not a big deal. What you have to do at every trading period is close out our short call. So we do that by buying to close. So really the key thing to memorize here is that we sell to open the call, and then to get out, we buy to close. And we can see the price went really high. It went to 292.62. So while we were able to collect 26 cents credit to open this trade, we ended up having to pay the call option buyer $1.27 debit to get out. So in this case, we actually lost money on the caller. So let's see how the math works out on this. The SPY went from 288.40 to 292.62 for a $4.22 gain. The option caller went from a 23-cent debit to a $1.27 debit, creating a $1.50 loss. So the net profit on this trade was $2.72. Now, again, this is a very large gain. It's not our average gain. In fact, we're really trying to get more like an average of 25 cents a profit 3 times a week, 52 weeks a year. And so if we look at some of the potential returns we could generate from this strategy and the potential annualized return, if we only make 25 cents a share 3 times a week, 52 weeks a year, that's a $3,900 income versus approximately $30,000 to own 100 shares of the SPY, or a 13% annualized return. Now, if we do a little bit better than that, obviously the returns and income become significantly better. And we're somewhere batting in between the average of 25 and 50 over the past 9 months. So you can see this has been our year-to-date return of 9.8, and we've got about 4 months to go. So we're right around that 1%. July is actually when I was predicting Trump would raise tariffs. So even though July was bullish for the SPY, I was betting down. So that's why we had a small loss in July. And then what did he do? He came out with the tariffs in August. So we've been a little bit early predicting what was going to happen. And that's why a lot of our members like to call me Paranoid Pete or Debbie the Downer or Negative Nancy, because I'm always quite precautious. Okay, so there's an example of how we can actually use the option caller to generate a profit to the upside, but have a lot of protection in case things don't go our way. Now I would like to take a look at a different example where we predicted a down move in the SPY and did a profit the opposite direction. So let me close out this trade and this trade. Let me find the specific trades I want to do. All right, so here is a example of us generating a profit with the SPY, predicting a down move. And so going into this period of time, we were actually quite bullish on the SPY, and we're sitting on big profits, being bullish. We're expecting the Fed to lower interest rates. We're expecting really everything to just go up because it looked like Trump was going to not escalate the trade war. I thought he would do it in July. I thought time was running out for him to escalate if he wants to be reelected. He can't really pull that off if America's in a recession, and trade war most likely is going to be negative to the economy the longer this persists. So lo and behold, he came out with his tariffs 1 month after I expected. And so we quickly flipped the trade to profit from a downward move and followed the trend until the volatility subsided. And so here is an example of how we can generate a profit to the downside. Okay, so we're now looking at the period of August 12th to, oh, sorry. Okay, August 5th, let me go to the date right before that. There we go. And we had a whole series of trades that are quite similar to this. Okay, so here we are. Let me pull up the charts. We can just see the time period. And so again, this is August 2nd to August 5th. This ended up generating a return of $1.32, and we'll look at how it worked out. So here's August 2nd, trading at 292, and the market absolutely dumped into August 5th and continued to do so for a few more days, and now we've been bouncing around. Okay, so let's look at how that trade setup was designed. Okay, so step one is again to buy 100 shares of the SPY. And this can be a little confusing to people. If you just look at the value of your SPY, your brokerage account is only going to know that you paid a certain price for the SPY, and it's going to know that it's gone down in value, so it will report that the SPY is losing money. So in a downturn, you're going to see the profit from the option contracts going up in value and not from the underlying asset. In a flat market, if we really think the market will be flat, we can simply make money selling the call option. And in an up market, we're going to see the big profits from the SPY delivering the return, which is what we just saw in the last trade. So if we think the market's going to go up, we're best off just letting the SPY appreciate in value and having the protection below, which we can finance from an out-of-the-money call. If we think the market's going flat, we might sell an in-the-money call option. And if we think the market's headed lower, this is your trade setup. So let's just look at the details. So at this given point in time, the trading price was $291.96. We agreed to sell a 290 call option. Now this is called an in-the-money call. That's because it's below the trading price. So I'm actually agreeing to sell my 100 shares of the SPY for $290. That's $2 less than they're currently worth. So why would we do that? Because the option buyer is paying a huge premium, $3. So there's a baked-in profit, at least on this part of the trade, of about $1. So if the SPY were to travel significantly higher and he exercised his right to that call option, I get to keep his $3 and I have to sell my shares for a $2 loss at the point of where I entered this contract. Now for him, he's only going to do that if the SPY goes up, most likely to 293. So he has to start making a profit after he pays for the shares at 290 plus gives me the $3. So he's making money if the SPY were to go above 293. Now that on its own won't generate a profit from a down move in the SPY. What we need is to own a put option. So what we did was we actually bought an in-the-money put option and we sold an in-the-money call option. So our put option was expensive at $1.81. So we paid $1.81 to be able to sell our shares for $2.92. And so this creates a scenario where if we're wrong and the SPY were to travel significantly higher, we're going to lose a little bit of money from the put option. And our total risk in this trade was 70 cents a share or $70 a contract. Now, on the other hand, if the market were to travel lower, because of the put option, we can make at most $1.29 profit. And the reason why our profit gets cut off is because the SPY is losing value at a rate that is faster than the call option losing value. And so in this setup, the most we could win, no matter how low the SPY went, was $1.29. And the most we could lose, no matter how high the SPY went, was 70 cents. So let's see how this trade panned out. And so this was the chart going into the trading period. Pretty clear trend. We had the bad news. We had a fundamental reason to think the SPY could continue going lower. And we also had the price action pointing down as well. So it was a no-brainer trade and how we're easily able to follow the trend of the market. Let's just look at the chart the next morning. So you can see it gapped down significantly lower. So what happened to the option prices? Well, we were able to buy to close that 290 call option for 7 cents. So let's look at that. We started off collecting $3.07, and we were able to get out of that contract for only 7 cents. So we made a $3 profit on our short call. Now, what happened to our put option? Well, we paid $1.81 credit to be long the 292 put, and come the next trading period, that had spiked up to $5.04. So when we entered the trade, we had a credit of $1.20. So you just take the $3 credit, subtract the $1.80, And when we exited the trade, we got an additional $5 credit, $4.98. So let's see what our total profit was. And in this one, we have the summary down below. So we can see the SPY lost value. It went from 291.90 to 286.76. So the SPY lost $4.86 of value. If you're just looking at your brokerage statement and not looking at your options contracts, you're going to think you lost money. But what happened to our short call and our long put? Well, the call option started off with a $3.04 credit, and we bought it back for 7 cents. So we made a profit of $2.97 on the short call. The put option, we paid a debit of $1.83. And when we exited that, we were paid back $5.04. So that's a profit of $3.21 on the puts. So during this time period, buy and hold investors lost $4.86. And we didn't get rich. This strategy is not designed to make big profits. We're going for consistent, high probability wins as often as possible of $1.32. So we made $1.32. Everybody else lost $4.86. So that's a good example of the two main strategies we'll use to generate profits. Now, let's take a look at some of the big news. Well, first of all, let me see if anybody has any questions before we go any further. Any questions at all out there, guys? Quiet group today. All right, well, no problem. Let's take a look at the big picture view, kind of what I expect to happen in the near term. And then we'll we got a question from Bob. Go ahead, Bob. I think your mic is muted. If you want to unmute your mic, we'll be able to hear you. There's also a chat box if you want to ask a question. So yeah, if you look at your little menu bar, there should be a little microphone. I think you have to click that to unmute yourself.
Hello, can you hear me?
Yes.
Oh, can you go back to that previous screen? The total return
The
before that.
the trade alert.
Yeah.
Oh, the summary of the return.
Yeah.
Sure.
That $1.30, that net profit and loss $1.32 a share. What did you arrive at?
You want me to go over the math on that?
Okay.
Okay, sure. So yeah, so this is the kind of the summary of the two screenshots, but let me just pull up the two screenshots so we can see. Okay, so this was on the 2nd. Let me see what day of the week that was. So this was a Friday, and I believe on a Thursday, the tariff threat had come out. I'll have to go back and double check that. But essentially everything was going smooth. We were positioned to profit from the SPY going significantly higher. It looked like Trump was not going to escalate the trade war. You know, I thought he was going to do it in July. Was actually positioned to profit from a surprise tariff threat. Didn't happen. So I was starting to think he just was not going to push the buttons until after the election. Boy, was I wrong. So he comes out, says he's raising the tariff September 1st, and we quickly get a sell-off. So the period before this, we were definitely caught off guard and definitely had a loss on the SPY because we were positioned to let the SPY appreciate. But after we had not only the price action of the SPY selling off rapidly, which we can see in this chart, and we had the fundamental reason to understand why it was selling off. So it wasn't just some arbitrary sell-off. This was quickly responding to the Trump threat. So you can see the market was doing nice and fine, and then it had a 10-point drop. Now, luckily, even though I was bullish going into this period, the SPY lost $10. We lost $4.50. So we had the put option, I think at we'll have to double check. I could go pull that up. The put option saved our ass. We didn't lose as much as everyone else. And then after we saw the trend change, and we saw the fundamental reason why it's changing, we needed to flip our strategy. So let's see how we did the trade. So again, typically in this program, we'll have a macro view of what the market should do, and we'll know what could cause it to change directions. And so right now, the macro view is that equities should travel higher, minus surprises about the trade war. That's really what it is right now. Earnings are strong, the bond market's not competing for yield, and the rest of the world's in the dumpster can. So that's why we're seeing money flow into the dollar, the US equity market, and the bond market. So let's look at the trade setup. So going into this trade, our value of our SPY was 291.96. Okay. When I closed the trade, it was trading at 286.93. So that's how we're going to calculate. That's the first part of the calculation. Started at 291.96, traveled lower to 286.93. So that's a loss. And I summarize, let me put up one more tab just so we can have that. Okay, so the math on that was the SPY went from 291.90 to 286.76. So I calculate that as a loss of $4.86. Are we clear so far on that? I think you got your thing muted if you want to talk. Okay, so next we need to look at what happened to the option contracts that we put around our trade. So we collected $3.07 from selling the 290 call, which is right here. And we paid a debit of $1.81 to purchase these put options. And the risk scenario graph really tells you what's going to happen. So you don't have to do all the complex math. There's a little bit that can't necessarily be illustrated in this, which is the implied volatility changing, which we can talk about if you want. But in general, if it goes below 290, you can count on generating a profit of $1.29. And if it goes above the 291.96, which you can see right here, you can pretty much guarantee you're going to lose 70 cents. Okay, so that was the outcome. If it travels somewhere in between there, we're going to either make a little less or lose a little less. So let's see what happened. Now to review, we collected 307 and we paid $1.81 to be short the call for a credit and long the put for a debit. Okay, so to get out, the short call lost value for the buyer, gained value for the seller, which is us, and our put option went up in value. So the put went from $1.80 to $5. The short call went from a value of 307 to only 7 cents. Okay, and now you can see I shortchanged myself 3 cents again here. I'm not sure if you're the Bob who caught my 4-cent mistake yesterday or not, but so we took in a credit of 304, and we had to pay back a debit to exit our option contract, which created a profit of $2.97. Now on the other side, the put option we were long. That means we had to pay a debit for the option, And when we exited that option, it had appreciated to a value of $5.04. So if you add these all together, that's a net profit of $1.32. And if we go back to that risk graph, lo and behold, that was approximately the potential value of our trade. Now, implied volatility does play with the value of options, and because we're not holding these all the way to the complete expiration, the volatility index can change the value of these options. So in general, if volatility goes up, that makes the value of options more expensive. And so that for us being long that put, that was a good thing. So is that clear, Bob, how that works?
Because it shows the degree to which the president is wielding his official powers against his political.
So far.
Okay. So yeah, let's talk about what we might. Now, right now, I'm not expecting a flat market. Let's look at some macro news, and I'll talk about. So those are the two ways we play the SPY with a directional strategy. We could certainly generate much smaller returns betting it will trade flat with a similar setup. I'll just show you guys what that might look like. Right now, that's not the expectations I have. So, and you know, from my point of view, I have to, people love our product when the market's going down because we're one of the few people who make money. And they like it when they make money in a flat market. But if the market's going to rocket higher, I can look like a complete idiot compared to buy and hold investors. So I try not to shortchange our investors by being too conservative when there's a pretty dead obvious big move in the SPY ahead. But let's just talk about if we thought we're going into a relatively flat period of time, how we might position our trade. Oops.
Candidates' abilities and action to make sure they're a good fit for the job. It's no wonder Indeed delivers 3 times more hires than any other job site. See beyond the resume with Indeed. Post your next job at Indeed.com/skills to try skill tests for free. As we age, our oral.
So if we were pretty confident that the market was healthy, we weren't overly concerned about some sort of huge sell-off, but we thought the market was pretty well priced, shouldn't go up much. This could be a potential trade where we can do well if the market just travels flat, up, or stays right where it is. So you can see in this trade setup, what I've done is I've sold a call option that's very close to the trading price called at the money. And I sold a relatively inexpensive, or I bought a relatively inexpensive put option. So I'm still not just owning the SPY outright with no downside protection because you never know what could potentially come. And I think you're going to see the key to long-term success is to avoid the huge losses to your account. And so the only really smart way to protect from big drops in value in your account is to constantly have a put option somewhere below your trading price. And so in this case, I can take in a credit of $1 and buy downside protection for only 34 cents. So I'm financing my downside protection by selling a call option. And I set myself up to potentially make up to $100. And I make some amount even if it trades flat. So you can see if this were to just trade in this area around where it is currently, I could make anywhere from $25 if it went down a little bit to $88 if it went up a little bit, and about $64 if it stayed flat. So depending on what we're expecting to happen, that's how we would alter it. Now, let's look at the SPY and talk about when we might tighten that. What I say is we're tightening the collar or loosening the collar or reversing the collar. So if we want the market to go down and generate a profit, we have to flip the collar upside down. We're selling the in-the-money call and we're buying the in-the-money put. And that allows us to profit if the market goes lower, but we lose if the market goes higher. And so what I'm expecting at this point in time is for the SPY to break into new highs. Now, I don't think it's going to go too much higher than this 300 to 315 range, unless we can really get a trade war deal. And the more I study it, the less I think there will be a deal. So right now, we're really playing on this fundamental view that the rest of the world is going into a recession. Their growth is dramatically slowing down. The growth engine of China has run out of credit. They've already built as many houses as they can build. They've already extended as much credit as they can possibly extend to build their Belt and Road Initiative. And now they're having lots of manufacturing companies leave China. So the overall picture right now is that bond yields are going to zero. The money supply is increasing, and this is going to create a flood of capital into U.S. products. The dollar is at an all-time high, at least over the last 5 years. U.S. stock market is near an all-time high, and I think it will go back to it without a major conflict. And I think bond yields in the U.S. are trending lower. At the same time, Trump is creating record deficits, which in its own right might be negative to the bond market. But right now, the U.S. bond yield is the only positive yielding bond really in the world. It represents 95% of the positive yield in the bond market. So this all spells that SPY has much higher to travel. So right now, I want our clients to have a loose collar. That means we want to sell an out-of-the-money call and buy an out-of-the-money put. So if something bad happens to the equity market, we're not completely going to take a huge hit because we have that put. But on the other side, if the macro view remains intact, we're going to capture most of the profits of the SPY. Now, the second we get to probably 302, 305, 310, you'll see I'm going to start tightening that collar to look a lot more like this trade. And eventually, once we do get another sell-off, we can just do this. So if we want to profit from down, this is how easy it is. Go put this slightly below the trading price. We put this slightly above the trading price. And look what happens. And betting down on the SPY is very lucrative. You can see we can actually get, if we're betting flat or up, typically we stand to lose more than we can make. And that's because the probabilities are that the market is geared to go flat or higher. The system protects itself. If the SPY collapses, this is problematic for a lot of people, namely the big banks. So really, the only time it does sell off is when there is panic. It has to be a widespread panic to actually have an impact on the SPY. So I like to bet down when we have two things lined up. Number one, I have to see the SPY is already selling off. And number two, I want to see some fundamental reason that is scaring the public. So if it's just selling off because people are taking some profits, they're rebalancing their portfolios, I could care less. But if you have the US president come out and say he's raising the tariff September 1st, well, there's a fundamental reason to cause panic that can spread through the media and create some sort of sell-off. And so the SPY product is very neat because we can track it 3 times a week and follow the trend. So any questions on, I think you got your hand raised again, Bob, but your mic's muted. If you have a question, please go ahead. I love getting input from the members. Any other questions out there before we take a look at the big picture? All right, great. Well, let's
Remember that is self-identifying Republicans, and the share of Republicans in terms of
okay, let's look at the big picture view. So again, the best strategy for most people to start following our program is to really master that Monday, Wednesday, Friday trade alert, because you're going to get exposed to the different types of trades, which are all the same. We're always selling a call and buying a put. But depending on the market direction, will either be a loose collar, a tight collar, or a flipped collar. So if we think the market's going up, we're going to do a loose collar. If we think the market is pretty well priced, should just stay flat or bounce around, then we'll do a tight collar like we demonstrated. And once we see both the market selling off plus a fundamental reason that could create panic that's being spread through the media, then we can flip the collar upside down and profit to the downside. And so the SPY product has the ability to generate consistent returns because of all this. Now, once you do get confident that you can follow our SPY trade, the SPY is just half of the picture. The other half of the picture is you really want to own bonds. And the reason why is when the bonds go up, the SPY goes down. When the SPY goes down, the bonds go up. In general, they're going up together. This is how Ray Dalio has been so successful, and really most significant hedge funds have used a very similar strategy to this. And so you can see when you combine the two together, it makes it very hard to lose. You want to add a little extra spice. On Tuesday, we have a 16% total return. We're doing the same concept, but we don't have the luxury of optimizing that position 3 times a week. So it's taking on bigger risk to generate bigger returns. And it has done that successfully. But if we do look at that Tuesday trade, you can see it's had bigger swings in both directions. Its worst loss was 4% December, but its best return was 7% in January and 6% in June. So it's almost realized the total return of the SPY program in a single month in January and almost in June. Okay, so let's take a look at the big picture view and we'll wrap this webinar up. So here is the core stocks or tickers that I'm following. Facebook is currently our Tuesday play. We've been going back and forth between Facebook, Apple, and the silver ETF for our Tuesday trade. And in general, when the trade tensions are easing and relaxing, or rather right after a significant sell-off because of trade tensions escalating, that's when I like to buy the dip in equities on our Tuesday play. Once equities have risen back to all-time highs, that's when I feel like Trump is most likely to feel confident that he can poke at China. So that's when we like to go long silver, expecting tensions to be re-engaged. And so by going back and forth between those two, that Tuesday play has definitely added some extra profit, but it's only represented a small piece of our total portfolio. So you can see I'm only risking 12% of my total model portfolio in the Tuesday trade. The bulk of it I prefer to have in the SPY. Okay, FXI is the large cap Chinese ETF, primarily holds their big banks and their big construction companies. To be frank, I think if the trade war does escalate, the two countries do decouple. In a very worst case scenario, investment in these sort of products could be completely outlawed. Number one reason why we don't get to actually audit anything in China. In fact, the communist government says that's illegal and they're proprietary secrets. So we get what's called an ADR, just a short little document they print out where we have to take their word for all of their profit loss. There's no real risk disclosures like there are in US securities. So tons of money is flowing into these products unknowingly from American retirement funds, mutual funds. They have no clue that they're supporting this communist party that is really problematic to America in the long run. And so I like to buy put options on FXI when the total market is set for a sell-off. And so we did get out of some positions on FXI for a pretty good profit last week. And I'll be looking for an opportunity to buy more put options on FXI. We're playing this in the Tuesday trade. So I do suspect the equity is going to have a strong.
Normal jobs are going to be replaced by robots. Yeah. They're going to be putting people out of work.
Yeah, they're doing that in office right now.
Yeah, maybe. We'll see. Right now, unemployment's pretty low. So the argument that robots are causing trouble is not quite there yet. But you can definitely see that, the cities where jobs went from America to China, not only do they vote for Trump, they are also having a crisis right now. Definitely a strong correlation too.
And they call your car. They say, yeah.
There used to be a secretary you'd be at the desk, sign you in.
No, I mean, but there's still some people at the desk though. At the VA, it's 3 people.
Okay, so moving along, we also pay close attention to gold. So if the central banks are all dropping rates, printing money, funding a trade war, that's going to create a push into gold. So we've done very well with our buy and hold positions in GLD and gold. Let's look at some of these charts. So TLT, this is our big position that helps balance out the stocks. And I do suspect this can go significantly higher. The big catch is if China were to buy agricultural products. Simple as that sounds, that is the key news item I'm carefully watching to look for flipping our option collar on the TLT. If they don't buy farm goods, I would expect that the trade war continues to escalate and that we need to be long the TLT and be long gold and Bitcoin. Now, if they buy some farm goods, we might see Trump not raise some tariffs, put some ease on Huawei, and then we want to be heavier on the equities portfolio. LQD is the investment grade bond ETF. As long as this is traveling higher, that means that our big companies in the SPY ETF have basically free access to capital through the debt market, which they are not using to spend on CAPEX. They're using it to buy back their own shares. So as long as the general direction of interest rates is headed lower, that's going to make it very hard for the equities market to not travel higher as well, because these corporations are borrowing money at close to free and then just buying back their own stocks. So this is an important ETF to watch. Now, the top of the top is looking very strong in America, but when you look at the middle of the U.S. companies with the Russell 2000 and the high yield debt market, it's not looking nearly as healthy. And so this is showing some general weakness. And that's why I look at HYG. We're not trading HYG, but it is a good leading indicator for us. This gives you a feel for just how much higher gold can go. So I'm looking for GLD to get to at least 175 in the next 12 months or less as the trade war escalates. This is part of our buy and hold portfolio, which is up significantly this year. Now, once it does get to some nose bleeding levels, that's when we're going to want to rotate out of spot gold, which is what GLD represents. And that's when I'd want to move into some mining ETFs for both silver and gold. So right now, we're all in on GLD for that part of our portfolio. And this is an important add-on to your total assets. This week we have a call option on gold. Stanley Druckenmiller is a big shareholder in this. And you can see this stock, Barrick Gold, has just been on a rip in the last 2 months, almost up 100%. And we've been playing various products in our Thursday play on gold, making great gains, but not risking a lot. This was surprising today to see Deutsche Bank up when everything else was selling off. And a key bank, if this were to go under, it could cause systematic financial stress. And that's when we'd probably flip our collar on both the bond market and the stock market, as this could mean some serious trouble ahead. So far, it's hanging in there. They've been laying off a lot of people, getting rid of unprofitable parts of the business, and it looks like they're going to be all right, but got to pay close attention to that. The most concerning thing today is the huge sell-off in Chinese stocks, which indicates to me that the U.S.-China trade war could be on the verge of an escalation. So this was surprising to see such a strong sell-off after the most recent, already getting past the most recent news. There was no big news that additional tariffs are being risen or that China was going to escalate in any way beyond what they've already said. So this was somewhat surprising today. There's FXI. Now, EWY is the South Korean ETF. They are allies of the US, and this is a good leading indicator for the stock market, for the general health of emerging markets. And you can see it's just been selling off since its high in 2018, and there seems to be no end in sight, which points to the overall trend that the bond market's headed higher, and that there will be nearly free money floating around the world with increasing monetary supply. All at the same time that one of the few places you can find strong profits are in these top companies held in the SPY ETF. IWM is the Russell 2000. You can see it's not nearly as strong as the SPY and shows the overall weakness in equities. So we still have a final hurrah for the SPY, I think, to break into new highs, and why we're so bullish on that trade right now. I like to keep an eye on oil. If it gets too high, that would put inflationary pressures on prices, which would be negative for the Fed to keep lowering its rates. At this point, it is cheap, so no inflationary pressures. It also shows that the growth demand is low, so it continues to push this narrative that the rest of the world is really suffering, that they're going to continue lowering rates, printing money, and that the last safe place to put your cash is into products like the SPY and the TLT, which are our two core positions. This is the most alarming thing besides the Chinese stock selling off, is the weakness in the yuan, the Chinese currency. And we had seen some strength. If I pull up this chart, you can see they brought the conversion back down to 7. Today it's suddenly jumped back to 7.1. A lot of rumors going on about HSBC, a huge European bank, actually being the financier of this, supporting the yuan. And all of a sudden, a bunch of CEOs got fired at HSBC. And it's questionable how much money China really has. Are they running out of dollars? Are all of their capital already associated to various projects? And are they on the verge of of defaulting on lots of debt? They've already had 3 big banks go under. So it's questionable how much pain will China really take before they start to make some concessions to the US, even if it's just some sort of head fake. So I think the big thing to look out for would be agricultural products. I think that would be enough to make Trump happy and for him to give some concessions back. And then if that were the case, who knows how high the SPY could go, probably towards 330, 350. On the other hand, if that were to happen, we'd be a little concerned about our bond position and gold position. So so unless we got inside the mind of President Xi and President Trump, very hard to predict what the best allocation is and why we have our portfolio so well balanced. The German bond that Trump's been going on and on about, you have to pay money to lend cash to Germany right now. absolute insanity. Why would you want to do it? And it's because people are speculating that this yield will go lower and the bond price will go higher. So instead of buying bonds for safe income, the whole world is rushing into buying debt for the opportunity to flip for a profit. And so you can figure that out. The bond yields cannot completely just skyrocket it. The governments couldn't afford the interest. So what's going to happen? The central banks of each of these countries will eventually step in and start buying their own bonds, monetizing the debt. That's why you want to own gold. And that's why the SPY is in such a nice position. There's nowhere in the world to get a good yield, really, except the SPY. Dean's in the webinar now. Let me go ahead and introduce him. He's part of our coaching team. Hey, Dean, how's it going?
Good, Jason. Hey, sorry I was a little late there. It's been a busy day with upgrades.
Oh, no worries.
So
Nice. Yeah, Dean, I pretty much got through the whole overview. So I'll let you talk to the members now, and we'll see if anybody has questions.
Okay, perfect. Hey, team. So quick background on myself. My name's Dean Gallagher. I've been working with Jason now for almost 12 years, and have been following the system now for a little over 4 months. My income over the course of that period has been about $756, give or take, right? Some weeks are better than others. Some weeks are worse than others. But I just have 300 shares of SPY and 3 contracts, and that's been my thing. And number one, if you don't own shares of SPY right now, you're probably crazy. Number two, if you're over 6 years old and you don't own shares of SPY, you're absolutely certifiably crazy. And number three, I would love to learn more about your investment ecosystem, and just see how we may be able to help you, see how I can personally help you make some adjustments and get you safer. And I really think that the number one thing that's really been eye-opening for me is the fact that Jason's taught me to be defensive in my trading. And it's insane how consistent profits get when you become defensive instead of offensive. And it really took me about 12 years to figure that out. And would love to see how I can help you, how Jason and I can help you, either live on your assets or create additional income with the assets you work so hard to create. And that's pretty much all I have, Jason. Now, I'd love to ask the audience, how many of you all have 100 shares or more of SPY? And you can type into the chat box if you don't want to speak up, but feel free to let me know how many shares of SPY you do have, and how your experience has been over the past. Following us for a while, how is your experience?
I am new. This is Tom. I am new to the program. I've about 2 weeks, I guess, and I have 100 shares of the SPY, and I screwed up the first one, so I'm still a tiny bit underwater after 2 weeks, but it is moving towards even within another trade or two, and as long as you don't make mistakes, I really believe in the program.
Okay, great, Tom. Yeah,
I've got one more question for Jason. I am
Sure.
not sure that he understood my opening question. And it relates
Your audio is getting a little crazy, and I just muted for a second. Go ahead, Tom. Sorry.
the TLT. Last Thursday, I mistakenly bought the August 30th position rather than the 23rd. So now today on the 22nd, I own the August 30th, and should I just leave that alone, or should I roll that down to the new?
I would definitely. So yeah, so you missed out on taking profits from the previous trade, I guess, or you just did it.
How can I take the profit?
Yeah, I would close that and put on the new trade that we just.
Whoa.
Sorry, Tom. I think your audio is getting a little crazy, but yeah, I definitely would not second guess the trade alerts or really alter them.
I'm confused because I'm not second guessing anything, because I on the 15th I bought the 30 rather than the 23rd.
Right.
So how am I
you had
how am I second
mistake
guessing
on the,
anything? I've already
date.
got the 30th, and should I roll the 30th down to a different 30th?
Yeah, I would use this trade alert, which we just came out with today.
Okay, so all right, thank you.
Let me unmute you, Dean. Sorry, I guess that was actually. Okay, wait. There you go, Dean. You should have your audio back. Yeah,
Okay,
sorry,
yeah.
Tom. I would definitely just follow the most current trade alert at all times. That way, you don't have to worry about anything. So I'm carefully choosing the strike that makes the most sense for the current condition. And so this trade was just generated, what, an hour and a half ago? So it's very fresh and accurate. And so right now we're essentially bullish on the TLT, the SPY, and GLD. Those are our three core positions. And the only thing that will change that outlook on the bond portfolio, we have the FOMC meeting September 18th. If that were to be more hawkish than expected, that would be very bad for both the.
Okay.
On the equity side, our main concern would be tariffs rising or the devaluation of the yuan, which started to happen a little bit today. Earnings seem pretty rock solid, so I'm not too concerned about that yet. And in terms of competition for yield, really, there's no really good alternative to these top positions in the SPY. On the other hand, another concern for the bond position and the gold position would be trade tensions easing, in which case, if we saw the Chinese buying agricultural products, I'd probably flip the collar on the TLT. I might completely get out of gold and Bitcoin and start to look for how high could the SPY go. And I'd suspect considerably higher, above 300, maybe up to 315 to 330 before I'd be starting to think it was getting too expensive. Now, do I think the Chinese will buy agricultural products? That's hard to predict. So I think the Chinese want to push Trump out of office, and they will do everything in their power to try to pull that off between now and November. So I think there's a lot of unexpected punches coming to the equities market, and most likely we're going to have to trade the SPY in multiple directions. And that's what's neat about the SPY is we can trade it 3 times a week and go with the trend, and we know what to look for. We look for 2 things to do what I just showed you guys, how we generated this profit on this big down move. So to generate that profit, we want 2 things. One, we want to see the price starting to fall. And then 2, we don't want it to be because someone's rebalancing their portfolio or taking profits. You know, we want a major panic in the media that we can fundamentally understand. And so that's really just as simple as China-US trade tensions escalating. We flip the trade to make the profits on the downside. And so here's the setup of how we do that. Go ahead, Tom. I think you have your hand raised, but your audio is muted, so please go ahead.
No, I'm finished. I didn't take my hand down.
Oh, okay. Yeah, no worries. Any other questions out there, guys? All right. Well, hey, I really appreciate everyone's time. Again, we highly recommend you get started just mastering the SPY. Once you get really good at the SPY, you're going to understand how our whole strategy works. And you can add on some of the other trades as you get going. And if you want to get some special pricing and get the whole program, call Dean 505-322-7515. And we have another webinar next Thursday. And look out for a SPY trade alert tomorrow at noon Eastern. Any final questions or comments before I wrap today up? All right, guys. Well, thanks again for another great webinar, and looking forward to having you guys on next week.
Yeah, thanks, team. Feel free to reach out if you have any questions. I'm more than happy to help. Thank you, Jason. Appreciate your time, bud.
Thanks, Dean. Thanks,
Okay.
Tom, for all your input during the webinar, and also Bob. Thanks, guys.